Nifty gained about 0.5% this week, but India VIX rose more than 7%. The index finished with better momentum, not yet with a broad market all clear. Monday's gap down was repaired, but volatility rose and breadth stayed weak. Tuesday's repair failed. Wednesday stabilized before a midday reversal. Thursday opened positively, but faded with financials and the broader market. Friday changed the tone. Nifty rose 1.1% and Bank Nifty 1.6%, with both closing near their highs. Friday's rally was real but narrow. Banks accelerated late and selected heavyweights participated, yet mid-caps and small caps fell and combined market decliners still outnumbered advancers. Large private banks had rallied ahead of their Saturday results. Those results are now out. HDFC Bank, ICICI Bank, Axis Bank, and Kotak Mahindra Bank all reported year-on-year profit and net interest income growth, double-digit loan and deposit growth, and lower bad loan ratios than a year ago. Margins were mixed. The results support Friday's focus on these banks, but they do not tell us how prices will react on Monday. Three forces shaped the wider backdrop. Concern around the Strait of Hormuz pushed Brent above $85, raising risks for India's import bill, inflation, and company margins. Overseas technology weakness created a difficult but concentrated queue for Indian IT. Provisional cash market data also showed foreign investors selling about 9,100 crore rupees, while domestic institutions bought about 9,800 crore. Domestic buying absorbed much of that pressure. Now to the expiry scorecard. What positioning suggested beforehand and what actually happened? Under our model's dealer position assumption, positive gamma may act like a shock absorber because market maker hedging can oppose smaller moves. Negative gamma may act like an accelerator because hedging can reinforce them. These are estimated scenarios, not observed dealer positions. For Nifty, the model showed a slightly negative gamma scenario below roughly 24,227, but the signal was weak. The expiry remained under pressure, yet repeatedly moved both ways inside the refreshed 24,000 to 24,200 range. The map identified downside risk, but the expected acceleration never became a clean one-way move. For SENSEX, the model showed a positive gamma scenario between the major 77,000 and 70,500 zones. SENSEX tested the upper area, reversed, and finished virtually unchanged inside that band. That broadly matched the shock absorber scenario. Movement occurred, but it did not become a lasting breakout. Momentum would become more convincing if bank strength spreads into the broader market while volatility cools. Monday's first test is how investors digest the large private bank results, especially the balance between growth, asset quality, and margins. IndusInd Bank and Bank of Baroda will show whether banking strength broadens. Infosys on Thursday is the clearest scheduled test for IT demand and guidance. The main risks remain elevated oil, continued foreign selling, and another rally led by only a few large stocks. Any European central bank surprise on Thursday could move currencies, yields, and risk appetite. We will also refresh the NIFTY and SENSEX positioning maps. A shift from positive to negative gamma could change the estimated backdrop from shock absorber to accelerator. Monday's opening tone will likely depend on whether weekend geopolitical news moves oil and how investors digest the bank results. The index begins next week with better momentum. Its quality depends on how widely that strength travels and whether geopolitics interrupts it. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security. And on a lighter note, Spain versus Argentina, midnight Monday, India time. Enjoy the World Cup final.